Your unique story, our global audience. Global One Media.
Hello, and welcome to this market update from Global One Media with me, Munir Barazi, your business analyst. Today, I want to touch on 3 points. First, I want to talk about the developments in the equity markets in 2023 thus far. I also want to talk about inflation expectations and monetary policy. And last, I want to talk a bit about commodity markets and what is happening there. So let's start with commodity markets. As you can see, this is the Nikkei, the Japanese index. Since the beginning of 2023, it has been climbing up. The same applies for the Australian benchmark index. And I believe that the reopening of China's economy might have had a role in this uptrend in this year. But of course, other factors are present, like approaching the peak of monetary tightening. So all of this encouraged investors to go back to risk on instruments. Even the FANG, which include giant tech companies like Facebook and Amazon and Netflix, it has been rising since the beginning of 2023. And this is quite impressive considering the decline it had went through in 2022. So tech companies tend to be cyclical. So this might be an indication that the cycle might be shifting now as we're approaching the peak of monetary tightening. The Nasdaq did jump in the beginning of the year, but then it dropped a bit. What is happening in the technology sector is that many big tech companies are laying off thousands of their employees. And in the short term, this can mean an increase in unemployment. But in the long run, I'm sure that those employees will find other jobs or perhaps build their own companies that could compete with giant tech companies someday. It might happen sooner than expected. And we're also seeing another interesting development in the tech sector. It's that hopefully there is an increasing efficiency, especially now with the rise of ChatGPT and potentially other companies joining the AI race, the conversational AI race, as Google now is working hard to launch its new AI chatbot very soon. So I still think that the Nasdaq might also recover. Emerging markets have also recovered in 2023. There is a pullback here, but still, I would hope that this uptrend continue. I will see if the index continues this upward move, then we might be seeing a long-term uptrend. The FTSE is recovering also. It has broken a key trend line here, and it's continuing its move upwards. When it comes to volatility, we have seen a decline in volatility in 2023 as compared to the swings in 2022. This might mean that the risks have become more moderate, but it's still the beginning of the year and we might see some more developments. But in general, this year is expected to be slightly less volatile than 2022. Other indices have grown. The S&P 500, you can see its up move. The Dow Jones, it has also climbed slowly. The DAX, the German index, and American stocks as well are continuing their upward climb. So in general, equities are positive in 2023. And this is mostly because investors and markets expect that the Fed, which often sets the tone for the other central banks, this is because the Fed is now slowing the pace of its monetary tightening. It has recently increased its rates by 25 basis points compared to 4 consecutive hikes of 75 basis points and 1 hike of 50 basis points. And even though Powell said that it will likely continue to raise rates at probably 25 basis points, still the markets are cheerful because they expect to reach the peak of this monetary tightening soon. We might not reach this peak, or we might see this peak probably in 2023. But this year, I expect rates to remain elevated until central banks see that inflation is under control. The Canadian Central Bank also signaled that it won't be raising rates any further unless there is some significant changes in the market or in the economy. It has also signaled that it reached the peak of its tightening policy. And whereas the EU, the ECB, has signaled that it will stay the course when it comes to raising rates. Arguably, the ECB is now the most bullish, or the most hawkish among central banks. In general, equity markets are doing well. Inflation has subsided. It has been falling for several months in a row in the United States, and this could prompt the Fed to also approach the peak of monetary tightening very soon. Inflation still is far from the 2% target, but it's a good development to see it going down. As for commodity markets, the commodity prices remain elevated. Supply has been particularly not very responsive when it comes to high demand and high prices of commodities. Given the slow response from supply, then we might see that prices will remain at high levels in 2023. It might also pick up in 2024, given that the IMF expects global growth to pick up in the next year. And we will see about what happens. It's still too early to make predictions 2 years ahead. But generally, commodity prices are expected to remain elevated. One of the factors that would support high commodity prices is probably the return of China and Chinese producers to global markets. They might consume energy and raw materials, and this could increase demand and keep prices up. Commodities in particular have been among the best performing assets in the recent couple of years. I think they will likely maintain this good performance in the short term and probably the medium term. One of the factors that could slow this uptrend in commodities is if we see the dollar strengthening significantly. I think the potential for dollar strength will remain somewhat limited, given that the market is currently pricing in less hawkish monetary policy. Those are the main points I wanted to discuss with you. If you have any questions, please leave them in the comments. I'll see you next month.